Templeton funds follow the investment philosophy laid out by Sir John Templeton. This includes analyzing stocks based on a bottom-up analysis of fundamentals of these companies and being patient while owning these companies. So the basic tenets are bottom-up and patience. The most important thing of value investment really is the valuation approach which we have towards stocks. We look at stocks from the point of view of earnings, and we look at stocks from the point of view of the assets. So by combining a valuation approach, remaining bottom up, and being patient with these securities, we believe one can achieve the best long-term returns for the unit holders. The investment approach really is to find within the investment universe the best companies which meet our criteria of being cheap, undervalued, as well as having the best corporate governance from the long-term point of view. We think that just like we expect our investors to give us a 3 to 5 year window of performance, we think it is important to be invested in these companies from the long-term point of view and achieve the returns which these companies have in terms of their earnings profile as well as their own growth as reflected in the stock prices of these companies. The fund follows a buy and hold strategy, and typically if you see our portfolio turnover is around 20%, which essentially implies that we own these securities for the 5-year period which we talk about. The investment style really is to look at the large cap companies within the market for Templeton India Growth Fund. The reason for that is that these are the securities which are most liquid, and because we are running open-ended mutual funds, we need to provide for both subscriptions and redemptions and be fair priced and offer a fair price to our unit holders in the fund. The Templeton India Growth Fund has a large cap bias. We look at companies with a market cap of at least $300 million before making an investment in the company. The portfolio strategy is based around the value investment philosophy which we have just outlined. Essentially, we look at companies over a long period of time. We take a 5-year view on the company, and we also look at the company's 5-year history. We believe past is prologue. So we also look at the companies from the point of view of corporate governance, the kind of decision making which takes place at the board, and the kind of growth path which the company has actually outlined for itself. You would note that Templeton usually votes all its proxies, and we've been an active fund manager to that extent, where we try to participate in the decision making in the interest of unit holders at the level of the firm. We believe investors should look at this fund because it is fairly different from the growth funds which are available in the marketplace. As mentioned, these funds typically tend to have less volatility as compared to the market, and because of the fact that we are buying in underpriced and underappreciated securities, the dividend yields tend to be better than the market, and the price to book values and price to earnings ratios tend to be lower than the market. To summarize, Templeton India Growth Fund was the first fund offering a value investment style in the marketplace. We see that over a period of time, across market cycles, the fund has done quite well as compared to the benchmarks. Despite the fact that most people believe that in the growth markets you should only invest in securities which have high growth, the fact is valuations are one of the most important reasons for investing in securities. The performance of this fund has held out in various market conditions, and we have seen that the returns have been slightly better than the market, and the risk has been slightly lower as compared to the marketplace over the tenure of the fund.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.